Hey traders, Raghee here. Happy Tuesday, everyone. Hope you guys had a nice day off here, and we're right back to a shortened week, but it should be an interesting one. Let's see how this market responds after last week's non-farm payroll, how it's going to respond to sort of the current OPEC turmoil. We'll see how that narrative continues. And good to see you all. We did have a charts and coffee yesterday. Great to see so many of you there for that. And let's see what we have going on today. Let's see, I was actually looking at the not that I'm a slave to seasonals nor that I follow them blindly, but it is interesting to note that today, July the 6th, is the market is subjected to elevated volatility after July 4th. But then 2 days later, July is best performing Dow and S&P month of the third quarter, Thursday, July 8th. So volatility on the 6th, very good performer on the 8th, which is Thursday. And so we've got some pretty interesting few days here to kick off sort of officially summer, if you will. Why do I say that? Well, the markets have heard from the Federal Reserve. They kind of have a pretty good idea of what the Federal Reserve is going to be tracking. And now we know for sure that each data point is either going to move us further away from the eventual rate hikes or maybe even closer to. So there's always that to keep an eye on. And I think the other part of the narrative right now is, again, we're going to see less volume. So we have to be even more, I think, tuned into where those volume levels are, those volume ledges, as I call them on the chart. So again, lots of slight adaptations we can make. Probably one of the easiest ones to make this time of year is just shorten the time frame. Don't look for longer term follow through unless your time horizon is very, very long. And shorter term time frame trading is not necessarily a bad way to deal with the summer trading months. So great to see you all. Let's kick it off with some questions from you all. And first up, hey there, James. Good morning. Was looking at XHB, yellow green, squeeze. I would not look at this for a squeeze. No, in fact, if anything, James, so remember the precursor for me specifically, right? Everyone's going to have a different environment that they feel is the right environment for a particular setup. For me, that would have been right in here, right in those 4 blue grab candle days. Really not super interested in a squeeze environment here. But as far as an aggro entry, I think that takes us right back down to this volume ledge sitting at about 73. So maybe there's another market that's still within the 4 blue candles. Look, the 4 blue candles are going to tell us what? We're range bound. We're stuck inside the wave. And that's usually what I'm looking for. So I can't tell you what an aggro would be because this just simply wouldn't be on the radar for me for that setup, especially after the move higher. So once we've got that tall green candle that we can see here from the first, I'm not necessarily looking at that for, I think it's already gone off. Does that make sense? That the jack in the box sort of market behavior, it's already gone off. So at that point, to me, I'll kind of wait for maybe a retest of where that low of the breakout candle occurred. All right, so next up, JMO, good morning, good morning. I've been waiting for a good opportunity to buy BP. Yes, so if we start to see some significant pullback action in the RBOB and in crude oil, and I know we're seeing some movement lower, but I'm not seeing anything that's getting me down to levels like, say, 73.20 on crude. I am looking for some volatility in crude as OPEC's trying to figure out what they're going to do. We haven't seen this kind of uncertainty and turmoil in OPEC since, and I can't recall if it was 2013 or 2014. 14, but we haven't seen this kind of turmoil, uneasiness, because a lot of folks are assuming that when OPEC can't come to an agreement, remember they've extended out the meeting date and just how long they're going to continue to meet to come to some sort of agreement now for what, 2 days, 3 days? And I have not seen any recent update to it. No, but I would still be long oil even if it were to pull back on this OPEC drama. So is BP then an opportunity? I can't say that BP would be high on my list. If BP is specifically a market you're looking at, keep an eye on those volume ledges. Look, if you squeeze in the data for the entire year, which puts you right about here, notice this area here around $26.50. That's your volume ledge. Where we are right now, not that far from. And it's sitting on a decent ledge around 26.70, 26.65. But the structure of BP, I can't say is wowing me in terms of a high quality uptrend. However, am I still bullish? Yes. And the reason for that is even though this is a yellow non-trending market at the moment, what preceded this was, as you can see there, double green. So if I have a double green preceding the yellow, then that tells me that we have still more bullishness. The path of least resistance is still to the upside. And I am always going to assume a continuation reaction to a transition out of a trend. So if that trend was down, we go into sideways movement, I assume the continuation will be down. If we're up and we move into sideways movement, I'm going to assume the continuation will be up. And that's just straight up Dow 101. Dan, great to see you checking in from my tent in Etna, California, mile 1600, about a week from Oregon. We have missed you all too, Dan. I was so happy to see you post here. I'm so glad all is going well. Dan's on an adventure, and Dan, oh my gosh, mile 1600, very, very exciting stuff. And I imagine that the heat that's been rolling through that part of the country right now has been making it pretty tricky, but so great to hear from you. Oh, that's awesome. John, can I comment on the recent rise in NVDA? So, I mean, clearly it's gone parabolic at this point. All of us, even if you don't know the reason why, it probably at this point doesn't matter. At this point, the why isn't really relevant. Whys are relevant on the breakout. I think the why for a move might be relevant within about a 72-hour window after an initial move. Why meaning the news, whatever the news is that surrounded the move. At this point, it's a parabolic uptrend. Parabolic uptrends, for as long as they're parabolic, tend to do pretty well off the 8 exponential. And the 8 exponential on my chart are the red dots, which are the simple propulsion tool. So, as far as commenting on it, it's a parabolic market. Pay attention to the 8, and just remember when markets stop going parabolic, that first step down tends to be a Lulu. So keep an eye on that. But yeah, I mean, it's parabolic. And by the way, that's just not terminology that I throw around. Again, not technobabble. Parabolic markets for me are a measuring stick of current price action, the chasm between current price action and the top line of the wave, the 34 exponential on the high. So when that is at least 1.5 times the daily price movement range, the daily price movement range in NVIDIA, the historical volatility, when we're 1.5 times that, the day that happens, that is then now a parabolic distance from, again, what I think would be sort of the regular volatility. Now we've, again, gone parabolic. So I know parabolic is something that can be very subjective to determine, but that's when I'll say, hey, so by the way, when did this market go parabolic? It actually went parabolic barely on the 24th, but solidly on the 28th. So by the 24th to 28th, that's how important it is to have a measuring stick, because once you have the measuring stick, you've got a much more fine-tuned, quicker, accurate gauge of market behavior. So if you like parabolic markets, or you need to shift in terms of some sort of parabolic approach to the markets between the 24th and the 28th, that was when we flipped the switch. All right, next up, SPX. So I don't look at the SPX directly, but I would look at the S&P futures, yes, futures. And then from there, we can look at the SPY, we can look at the SPX, we can look at heavily weighted sectors within the S&P. So with that being said, it's up. I don't want to short it. It's a double green market. It's gonna move with the Nasdaq mostly. So as far as my approach to it, I don't want to buy it here, but it is buyable in a dip, and then I'll look for relative outperforming sectors and stocks within that group that we call the S&P, right? All right, so ready for a solid week of trading, Elon? I'm with you. I am with you. In terms of the strength and weakness of the currencies, so yeah, just a quick Cliff Notes reminder. So I like to go to FinViz, so FINVIZ.com. Head on over to the Forex. Head on over to Forex, then Performance. Make sure it's on the 1 day. So you want the 1 day relative performance. And then that's it. This will shift throughout the morning. And what this particular layout is saying today is mixed. This is absolutely mixed. Why would I say that? Because on one hand, we have New Zealand dollar strength, Australian dollar strength. That would typically suggest strong stocks, but we also have yen strength. Well, that would suggest weaker. Now, yen is not the number one strength story, but that would suggest typically a little bit of risk aversion. Weak Canadian dollar would suggest a little bit of risk aversion, but that also could be tethered to the crude oil story. So mixed at best. Yeah, mixed at best. Maybe take another assessment at about 9:35 Eastern, and then definitely check it again around 10 a.m. after the clearing and see what this layout looks like. Okay, see if the yen wants to pick a side, or if it's just going to be mixed, it's going to be mixed. And at that point, Debbie, I'll have to lean on some other tools to understand what the markets are doing. Look at the sector relative outperformance, look at the index relative outperformance, and go from there. Hey there, Dale. I noticed I'm using volume profile a lot on my charts. Well, Dale, I mean, we've been using volume profile on the charts since Sector Secrets back in 2018, 19. So yeah, I mean, it's not anything that we were doing specifically now. I think the way that it looks on the chart, clearly with the volume, not the histogram, because I don't really care about volume based on time. But yeah, this has basically been the evolution of the submarket sonar that we've been talking about since, and I can't remember the year. Does anyone remember what year we did submarket sonar? 18, 19, 19, I think. So we've been doing it since submarket sonar for, I guess, 2+ years now. And I don't mind using a variable, so it would adapt to whatever's on the screen. But yes, I will always anchor it. So yes, Dale, I will always anchor it, and whether it's a VWAP, volume profile from the standpoint of value area high, value area low, point of control. Yes, it's always going to be anchored. And I think a lot of folks know we like to anchor tools because look, we anchor moving averages to a certain number of periods. We anchor volume in much the same way, although I'll be specific to time, intraday, and date, end of day. So thanks for the question. And it's just sort of the continual evolution of just more ways to view why certain price levels are going to be more psychologically significant as support and resistance. Any thoughts on a long call in pen? All right, let's take a look. All right, so maybe wait for a 1, 2, 3. Maybe wait for a 1, 2, 3 and a reversal through the wave, which would put you looking for, say, a resistance in this area to this area. So you got a lot of resistance in here. Maybe a 1, 2, 3 kind of action. I mean, look, the 1, 2, 3 reversal is valid because you see the preceding trend. I would like to see we're red again now. I would like to see the 1, 2, 3 form in this kind of environment where we've gone a little bit more sideways. We're not there yet, but I would maybe look at a 1, 2, 3. And I would like to see the JT multi go yellow. So that would be a great environment for this reversal, this 1, 2, 3 reversal to occur. So Brooks, that's what I would wait for, not just a 1, 2, 3 pattern, which we've talked about many times here in the room, but also the underlying environment, the JT multi to go yellow, showing me that, yeah, the preceding trend was down, but at least we're going neutral and the market's open to maybe at that point a shift in direction. All right. So SPCE. It's up. I mean, clearly pullbacks to 13 could be interesting. So I don't like markets that start to do this. I don't like, that kind of volatility, right? It's not my cup of tea. However, if we can these two candles are interesting to me. So when you see these large candles like we have here and here and here, for me, getting a narrow squat bodied minor low or inside day, right? That's what would be useful. So if I have a lot of volatility, but then there's and this is double green, by the way, so that's nice. If I can get a narrow ranging candle, just to show a pause, that will oftentimes be sort of the entry into the opportunity and specifically to the long side. So thanks for the question. All right, moving on. So gold, I'm still not loving gold. I think gold and bonds still have a disconnect. I know it's moving higher. So when I say I'm not loving gold, if you guys have been following us here at Charts and Coffee for a while, we've been talking about gold in this range, and we've been waiting for some sort of breakout, which we have, but this is not a day that I'll do anything with. What I've been recommending, just to recap those of you that don't know, is we have a sideways market. What's the path of least resistance? Well, look at from where we came. So long and long only is the only conversation here. That's been something pretty steady. The next part is grab the range, cut it in half, and focus on the lower end of the range. Where are the volume ledges? Like that. And then we've got our breakout. So gold's up. It's finally doing something that it's been incapable of doing, which is getting outside of that Darvis box, but it's breaking in the direction that we figure would be the path of least resistance. And it's some pretty decent escape velocity there to put some space between that range and where prices are right now. And then in terms of volume, yeah, take a look at all that. So this is what I mean about understanding what volume is telling us. Look at that. Look at all that volume in there. That's the gravitational pull. Prices are sort of spinning and spinning in that area and looking for it to just sort of spin out. Why out? Double green preceding the yellow market environment. So thanks for the question on gold. Finally moving higher. Cool. But I won't engage the market there. Okay. All right. So with that being said, I'm going to be running into the futures room right now. We're going to take a look at the markets, do a little day trading, live trading. Day number 2 for live trading for the playbook class is on Wednesday, and you can still join us. The first session was already recorded. Class is already there. So first session is going to be, our second session is going to be on Wednesday. In the meanwhile, have a great one. I will see you all tomorrow. Be good to each other. Until then.